Hey, welcome back to your daily update of AMC stock. We're back. We have another tweet from the CEO here. Once again, it's just a tweet from the CEO. Remember, we're just talking about the AMC CEO here today. But as we predicted, we had a little bull rally into Friday. I kind of expected that from the credit rating being approved, and that's really what this tweet is about. But my expectation was either if we were going to have a rally into Friday, we might potentially have another rally going through this whole week and potentially get up to around $60. That's where I could see this level kind of going out at around these levels right here, sitting in the 60, consolidate and wait for a next market mover, even if it does not mean that much. In this case, we got a latest tweet here, which was on Sunday, and it was talking about issuing equity. A lot of shareholders have mixed feelings about it because yes, it is helping out the company to bring in new money, but it also is diluting the share count. Fortunately for all of you guys that think that way, they cannot issue any more shares. They have a set amount of shares that you're allowed to issue, and they can't issue it until the next cycle. So it's going to be a few years till they issue more shares, but they could always buy back shares. So it's as bad as it's going to get whenever you're talking about overall share count. But anyways, his tweet was this: smartly issuing equity as AMC did January, May, and June can fundamentally strengthen a company and mightily benefit shareholders. Due to AMC raising $1.25 billion in the past 45 days, S&P upgraded AMC's credit rating on Thursday, another important step forward. So once again, that's a good reason why we saw this rally into Friday on June 11th, where we saw this rally kind of just chug up throughout the day, all the way back up to 50. Now, this is just one of those things, one news thing can really just take the thing off, and that's why I love the high catalyst stocks. Even if you're not really for the movement, it's still really sick how something so small can boost a company so large and the movement's actually working. If we go to a better article here that really explains it, AMC shares were up more than 5% after S&P Global Ratings upgraded the company's credit ratings to CC plus from CCC minus. So the whole point of this is actually working, right? The company is able to raise cash, pay off debt, and simply be able to do everything that needs to be done to keep AMC alive. So the APE movement is working. Pay down debt, refinance expensive debt, improve theater attendance. But the thing that Adam didn't mention, which I think is still funny, he should have actually mentioned the rating that they're getting. This is kind of just reserving the fact that AMC financially still needs some work to be done, and that is something that everyone knows. Because if we look at an actual chart of how these grades actually are, when you're looking up here in investment grade, up here you're talking big corporations. When you look at investment grade, you're talking about Walmart, Amazon, Target. But when we're in the CCCs, it really doesn't matter where we are. It was at It was at the point where it was at in default with little prospect for recovery. So basically the apes put it out from default, basically little prospect for recovery, basically the lowest of the low, into where the point we're at substantial risk. And that's if you were to buy a bond from the bond market, it would be rated as substantial risk, which is a big difference from default to risk, because we're okay with risk. We're not okay with default. So we'll see really where this specifically takes us, because once you get into the B's again, that's when things will get a little bit easier to be able to raise money in the future. But as the company becomes more profitable again after the post-pandemic losses, that is when the balance sheet really should stiffen up. But one thing to keep in mind is in mid-pandemic, I believe they got to a CC at one point, which is this level, basically in default at this point. And they grinded their way back up all the way up to the C plus level, which is pretty good considering in 2019 before pandemic, they were only sitting at B anyways. This is a highly speculative business in general, and that's in quotation marks. And that's because of things like this, because technology could potentially put them out of business. Crazy things like the pandemic could, pretty much a lot of things. So they're always going to be in this junk bond, but we see that we're getting closer to this B rating, and then maybe we can get even higher because all of this movement behind the company now is huge. AMC is playing into the whole shareholder notion, giving free popcorn to its shareholders. It really is an amazing thing if you think about it. But I think we've returned to a healthy state at this point. The dilution is over 170 million shares in 2020. They can't do that again until 2022 at least, and at that they probably still won't, because they'll realize that their shares are way too diluted. If they do this year over year, people will eventually give up on them. The other thing that put a lot of downward pressure, Wanda selling off AMC theaters for $426 million. Those two things happening at the same time in May, June, basically April, May, June. We had $426 million going here. We had a good chunk of that 170 million of share dilution. That creates a lot of downward pressure, and that's a good reason why we had this thing just basically being a sitting duck for a while, because we had so many apes coming in buying, but there's not enough money in the world to, you know, offset them printing basically 170 million shares and 426 million shares being sold off by one of the largest shareholders, a Chinese shareholder in Wanda. But once we got past that, we saw this huge takeoff all the way to $60. And I don't see this thing slowing down, considering we now as retail investors own 80% of the stock, which is actually pretty impressive. But we'll see what it does today. If this is a green day, I'm confident we'll see a rally all the way up to around $60, maybe get back to 2 weeks ago's levels, just hovering around 55 to $60. That's definitely where I see it going from the technical analysis. RSI indicators also correlate with that same prediction. So hopefully we get up there, hold solid, you know, consolidate for a week or two. That would be fine. And then once something new pops up, once we get some attendance reports or anything of that nature, we will be ready to soar again. But that's going to do it here. If you guys want your free stocks, though, down below, Robinhood, of course. I know not a lot of you guys like Robinhood anymore, but there's like 3 free stocks down there. There's Webull, a few free stocks there. And then M1 Finance, which is actually one of my favorite right now. You're getting up to, I think, $30 right now for just signing up. Even if you don't stick with the platform, you still keep the $30. So those 3 I would recommend if you want like $100 of free money. If you add up all 3, plus I get like 1 stock every time you do that. But I hope you guys have a great day. Hopefully this is a very green day for you guys. And I'll see you guys in tomorrow's AMC recap. Have a great day. Bye-bye.